Okay. Sorry about that. All right. So we're gonna again see this more and more and more and learn to understand what a trend line is. Okay. So I'm literally repeating the same thing over and over because I really want you guys to truly understand this. Okay. So this is a downtrend, also considered as a bearish market or a selling market. Okay. So when you are looking at a bearish trend on a monthly, weekly, or daily, because those are the time frame you look at it at, right? You only looking for sales. So a downtrend, a downtrend, all right, a downtrend market, right? Ooh, yeah, market. You look for sales, all right? That's what you look for. Now, um, I'm not going to teach you how to go against trend. I'm teaching you how to go with trend. So you only look for sales, all right? Doing a selling market, like I mean, it says it's a selling market. It's falling, right? You look for a sell, nothing more, nothing less. Okay. So once mark, as you can see, it's a downtrend. So let's go ahead and put the little structures indicating what's what. That way we get a better understanding of our trended market, right? So in a downtrend, right, we get what? We get lower lows, right? And low highs, right? So lower lows and low highs, 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 lower lows and low highs. Okay. So you look for sales at, okay, at the low high. All right. So in a selling market, you look for your sales at your low high. Oh, maybe it doesn't look too clean enough. Let's go ahead. See if we can make it look better. Think it's, yay. You look market sales, right? Sell at, right? Look for sale. Ooh, look to sell. Sorry, it was not there. Look to sell, look for sell at your lower high. Okay. You sell it to target the next lower low, so on and so forth. So you just let it give you that pullback and then you take it back down, so on and so forth. All right. Easy money. And again, always use the higher time frame, which is our monthly, weekly, daily time frame. All right. Higher time frame technical analysis, the bigger picture. All right. Take, there you go. All right. You want to be part of the big play, not the little play. Okay. So again, when you are placing a trend line, I recommend that you use the turnaround point, which would be you using the line chart that show you the exact turnaround point, because the trend line is just another indicator to give you a general understanding if the market is trending down and if it's reversing, right? At what point is it going to start reversing? Now, again, let's go ahead and put the trend line first, right? So notice if this was the first one, that's how it would look like. Okay. Now you can always readjust, as you can see. All right. That's what I did. I readjusted because this one is a bit higher, right? It's still a trend line. Okay. It doesn't always have to be at the peak. Okay. And again, it doesn't have to hit 5, 6 structure point, because structure is structure. A reversal has to be a previous low high broken, or a previous, let me be more specific, a previous high has to be broken for a reversal. Okay. And here, as you could see again, it broke the previous structure point, but before it broke the previous structure point, it broke the trend line. All right. Sometimes it will be exactly at the high point. It will be 1 to 1, right? But once structure is broken, it gives more validation to the trend line, right? So again, you look for market to retest, right? Retest or retrace back to a previous low structure point, right? Structure points are areas where the market stops and just reverse or turn around, okay? Or previous structure point. So here That was a previous structure point. That was a previous low high, right? Look a bit unorthodox, but yeah. Or previous low high. Okay. And as you can see, it bounced off so, and then again, we will just wait for our price action. Once market give us a price action, again, this price action will be available in the 4-hour time frame. Due to the fact that we trade the 4-hour time frame, it will be a 4-hour bullish engulfing any one of the sixes. Remember, the ultimate price action available now at Amazon. Just type in Royalty FX Academy. You will see the full mastery collection, all 7. Okay. Now, you will naturally wait for the retest point. Once market give you a PA, it has to give you a PA. Like, it's very, very important. Please, it's very, very important that market give you a price action before you take the trade. Don't assume it's just gonna hit and go up. That's gambling. Okay. At least get validation, right? Confirmation to take that trade. All right. Don't just assume because it done it before in the past. That's exactly what it's going to do. Let the market tell you what it's going to do. Then you just join it. Okay. Because look, if of course proper stop loss placement matters too. Okay. If you take this, your stop loss still goes at the last low, right? So last low is down here. That's where your SL go, right? If you enter up there, right? What happened if you place a buy because you assume it is going to bounce off that and it falls more, right? Now you want major drawdown. Now, cool. If you follow my method, it won't matter when it comes to the drawdown aspect, but this matters when it comes to price action because I need you to take that. But let's just say hypothetically speaking, right? You didn't wait for the price action, but you follow the rules when it comes to the stop loss placement. Remember, right? No matter what happened, we are risking, right? $50. All right. Looks like a 5, right? Okay. We are let me fix that a little bit. Right? No matter what happened, we are risking $50. Okay. There we go. All right. So we enter here, stop loss at the last low, we risking $50. Now, here's the thing about that. If you wait for your price action, sometimes you could wait for the price action and market choose and it falls to the next structure point. That's okay. There's nothing wrong with that. You're still risking $50. Okay. You just simply, either one, write it out or wait for another PA and add on another entry. All right. Or if you choose to cut your losses short, which I'm okay with, you would do that now, right? Or you could add another entry after market give you a price action, but you're not gonna be risking $50 this time around. You will be risking at least 25 or less. Okay. Because remember, per trade, you're risking $50. Now, the reason why I'm showing you that and make sure you wait for this is because look, let's just say because of how far the stop loss is, your lot size probably would have to be, let's just say $1, right? And again, you assume, right? But let's just say it does push down because you took it without price action, right? That could end up being a $2 trade instead, where you are more likely to make more out of it because you get to take a bigger lot size. Again, you're still using the same stop loss and you're still risking $50, right? Now, again, if market falls, when and if market fall after you take that buy, it goes against you. It comes to that zone. Again, you okay with losing $50, right? You okay with that? Now let's just say you're like, okay, you know what? I don't want to lose the $50. I'm gonna cut my losses short. I'm okay with that too. Sure, by all means, cut that loss, right? But now at this point, you're not losing 50. You're losing about 25 or less, right? You're losing half of that. Let's just say, let me clean that up real quick, right? It falls to the next one, right? Now you're risking 25, or you cut your losses short, you only lost 25. Why does it look like an 8? Right? You only lose $25, right? Now, once market gives you a PA here, you take the same price action with the same method, $50, right? Stop loss at so, right? And then for it to go to the to the top. Okay. Now, so on and so forth, right? Let's just say hypothetically, it does come back down to here again, right? You took 2 trades. Now, please understand, you took 2 trades already. If it does not go to the top, we're gonna acknowledge that. If it doesn't go to the top, right? Let's just say instead it falls to this zone right here, right? Okay, cool. Guess what? You lost 2 trades, right? Combination altogether, you really just lost only $50 because you had cut your losses short. But guess what? The setup is still valid because that was a previous structure break, right? We're just looking for a valid. I'm sorry, I said it was setup is still possible, not valid. The setup is still possible. Once market gives you a bullish engulf, and you will take it like so. Now, based on the wicks, right, of the candles, that's why you what I mean by that is when market gives you a double bottom like so, 2 equal lows, and you don't exactly have a previous low, sometimes, well, what you will look at is the price action wick, how it looks like. If this wick is lower compared to this one, right, when you enter for your trade, like so, you will use this low as your stop loss. If you don't have a previous low that's lower, see that? You still following the same method as using the previous low. And that'll be that. And here's the best part about that, right? Please understand. Notice how the market comes all the way down here to give you a 2 equal lows, a double bottom. Remember, it did give you a new higher high, right? So if it fall past it, right? If it falls past it, what is it going to have to give you? A trend reversal. Okay. It will literally give you like the next available setup. Okay. Let's go ahead. I think I had a few more left, right? I don't want to extend the video for too long, but okay, you know what? We're gonna stop it here. Hold up. Yeah, we're gonna stop it here, and then and re-record another one because I don't want to make this video way too long. Now, if you are again interested in learning this method, if you find this way to be very helpful, easy to absorb, to process, to learn from, Royalty FX Academy, right? We are not accepting students, and also check the link below. And if you don't have the time or you don't have the money, we do have our books on Amazon. You could purchase and you could learn at your own time, at your own free will, either when you're at work or you at their dinner table, right? Now, also, again, I can understand money can be tight if you don't have the funds to purchase the book. My videos are available to you or for you on YouTube. Okay. Now, of course, I cut them in half because I don't want you to sit there for a whole 45 or hour watching this video. So I break it into section at least 18-minute long. Okay. So check me out on YouTube where you can watch the videos in section. That way you have enough time to really absorb everything, right? And not be overwhelmed for sitting there for way too long. Okay. Royalty FX Academy on YouTube is where you'll find me. And again, I appreciate the likes and comments and supports. Any question that you may have, feel free to comment below, and I'll go ahead and make a video on that. And of course, I will try my very best to reply right away. And again, this is another video with Royalty FX Academy, right, where we teach discipline. We give you your time back, where you don't have to sit in the chart to trade. Okay, I'm gonna see you guys next time.